Hello everybody and welcome back to the channel. In today's video we're going to be taking a look at General Motors and see if it will be a good investment to add to our portfolios. General Motors is an American multinational automotive manufacturing company headquartered in Detroit, Michigan, and they are most known for owning companies such as Chevrolet, Buick, GMC, and Cadillac. One thing to keep in mind, guys, a key very important note: if you saw the title of the video, all of these brands that I just mentioned, they are built in America. Now the stock is not at all-time highs. The all-time high for the stock was 62. Keep in mind, this isn't a growth stock or a tech stock that's going to grow 1,000% over a year. As you can see, the 52-week low is $38 and the 52-week high is 59. They have a market cap of about 50 billion, PE ratio of 8, which we're going to take a look at this PE now and determine whether the stock is expensive or cheap at the moment, as well as we're going to see the intrinsic value, and it does have a dividend yield of 0.94. So let's see how safe that dividend is. To start off, as always, let's take a look at what Wall Street analysts are expecting for this company. So out of 29 analysts, they have a rating of 3.89 out of 5. That consists of 11 strong buys, 7 buys, 9 holds, 1 sell, and 1 strong sell. Now this right here is not the intrinsic value, but it's more of an estimate of the price that this stock can reach based on the analyst estimates. They have a high of 105, an average of 61, and a low of 37. If we take a look at the earnings history, we can see everything is pretty much in the green except Q1 of 2025, but then everything is expected to change. And a quick note here, in Q4 of 2025, they're expecting a year-over-year growth of 36%. I think this is because of the title of the video of what was just announced yesterday by President Trump, that he's going to have a 25% tariff on any car that is not manufactured within the United States of America. And due to this, Honda is already building a plant, I believe it's in Arizona. And not only that, he mentioned that if you buy a car, especially the ones made in America, I think only the ones made in America, the interest will be deductible from your taxes, but I do not know the date yet of when this will take effect. However, the 25% tariff was already signed yesterday. Now, as always, taking a look at annual estimates and revenue and EPS, we want this to be increasing. So from 2025 to 2026, that's a check mark. It goes from 11.50 to 12.06. December 2025 to December 2026 for the revenue estimate is going from 182 billion 0.11 to 182 billion 0.38. One of the main reasons I'm looking to invest in a stock like this now during this crazy time in the market is because a stock like this is not going to move much, even though, as you can see, it moved 3% yesterday because of the news. But this is more for capital preservation. So let's go ahead and see how good its dividend is. Now, when you take a look at this is completely terrible. It has a 5-year growth rate of about negative 0.20. It only has 1-year dividend growth and a payout ratio of only 4.55, which is the only thing keeping me looking at this stock. Guys, keep in mind, this is not financial advice. I'm not telling you to buy this stock. This is my own personal opinion. But if their payout ratio is so low, I believe in the future this yield can increase, so the 5-year growth rate will increase as well. And obviously they got to maintain the dividend growth. So let's go ahead and take a look at the stock's PE ratio and see what it can be worth. Now, if we put in the ticker symbol GM, the growth rate projection, which is 6.2, as you can see here, key information, earnings growth rate 6.2. We can see that the stock's intrinsic value will be about $133. And if you buy it at a margin of safety, which I like to do, of 35%, a buy price of 76.92, and the stock is currently at 50.95. So pretty much in every single analyst formula, this stock is a buy. However, there's always a but, people. There's always a but. Let's go ahead and take a look at the PE ratio compared to the price of the stock and determine if the stock is currently expensive at the price that it is, or if it's cheap. Now, if we take a look at the 5-year average, right here we have the stock price, here we have the earnings per share, and here we have the PE ratio at the time. So for example, guys, in 2021, this stock had earnings per share of 6.19. Then the price of the stock was 56, but the PE ratio was only 9.07. If we compare the stock now to a similar price range, which is about now that it's at $53, we can see the EPS is 6.37 and a PE ratio of 8.36, which is less than in 2021, but at the same time, it has more earnings per share. So what does this tell you? The stock is valued cheaper, quote unquote, than it was in 2021. It is currently at a lower price than it was in 2021, and its earnings per share is higher. So the stock is making, I guess the simplest way I could put it is making more money and is valued less. So how can that possibly be, right? If it's making more money, if it's selling more cars, how is the stock worth less? Well, this is where you get to take into account that maybe this is a good opportunity in the market. Again, not financial advice. I'm just looking at the stock for capital preservation. I was hoping the dividend growth rate was a little bit better. That way my money could be worth more in the future. The only other competition that I was looking at is Ford, but Ford EPS is negative 0.3. Maybe now with this tariff thing, that will change in the future. So you could maybe have Ford as well as a play and just hold it for this term. However, we don't know when this tariff is going to really start taking effect. We don't know when the consumer is going to start feeling it because there's already cars in the market. We don't know how fast that is going to take for the cars to sell out. So if you guys enjoyed the video, please consider leaving a like. Don't forget to subscribe and let me know in the comments below if you think GM is a good stock to invest in.